Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, dubious speculation. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, as always, guys, I don't have a crystal ball. I don't know what's going to happen in the market, but I will do the best job I can as to outlining what I think are, let's say, the most likely outcomes, even though sometimes the most likely outcomes, as far as I see, don't always play out. I will continue to at least talk about them. If you're new, one of the things that we've been tracking really closely this year is the comparison of Bitcoin in 2024 to Bitcoin in 2019. Now, why do we make that comparison? And anytime I post about it on Twitter about 2024 and 2019, like a lot of people are always like, well, this is a halving year. Why should we be concerned about what Bitcoin did in a pre-halving year in a prior cycle, right? Why concern ourselves with that? I think the biggest evidence for why it's important, why monetary policy plays a role, is looking at flows within the cryptoverse, and are we trending towards Bitcoin season? Is it altcoin season, right? And by what I mean by that is what's outperforming what, right? Is Bitcoin outperforming alts, or are alts outperforming Bitcoin? And one of the things that I think a lot of people came into this year with was the expectation that Bitcoin dominance would go down. And the reason they came into this year thinking that and calling for alt season prematurely, as I said many times, was because both in 2016 and in 2020, you can see that Bitcoin dominance basically dropped about 15% by about this time in the year, right? About 15%. Now, if you were to go look at Bitcoin dominance, we'll talk about USDT dominance too at sometime later in the video. But if you were to look at Bitcoin dominance and we were to go to, say, the beginning of the year, where Bitcoin dominance began the year was around 51.6%. Now, 15% down from there would have put it at 43%, right? So back over here, one of the reasons why so many people were convinced that alt season was going to occur was because normally in halving years, Bitcoin dominance goes down. But over here in our neck of the woods, our small allocation of the cryptoverse, we said, no, wait a second. Bitcoin dominance is a reflection of monetary policy. And when monetary policy is tight, you should not expect dominance to go down. On the contrary, you should expect it to go up. And while Bitcoin dominance is normally down 15% by September in halving years, this year it was up about 15% around that same time. So for me, the biggest piece of evidence that monetary policy impacts the cryptoverse is Bitcoin dominance. Now, I will be honest with you guys. I don't need Bitcoin dominance to tell me that monetary policy is going to impact one of the riskiest asset classes that we know, right? A lot of this, I think, should be, frankly, common sense. And I think when I talk about it with people outside of the cryptoverse, especially in, say, traditional finance, it's one of those things that is more obvious to people. Like, of course, you're going to have the flight to safety trade during tighter monetary policy and high interest rates. But it's been really difficult, of course, convincing people of that in the cryptoverse because, of course, people just want to talk about alt season. Okay. So this is the reason, right? And again, if you look at this year for dominance and you compare it to 2019, you can see it looks a lot more similar to that than it does to 2016 or 2020. So when you look at Bitcoin USD and you say, okay, well, let's assume for a minute that monetary policy does play a role, which it does, right? But let's just assume if you're not in agreement, let's just assume for a minute that it does. Okay, what would we expect if it were to play out like the last cycle, right? What would we expect? Now, one of the things to remember is if you overlay interest rates onto the chart, the only other time in history where we can really look at a smaller business cycle is back over here in 2017, 2018, 2019, and then where rate cuts ended up finding a bottom. And so because I consider monetary policy to play an important role with investing, especially with cryptocurrencies, I have to compare this to this, right? For me, I don't really care if it happens to correspond to a halving year or not. All I care about is what happened at that point, right? You could argue as well that in the last cycle, in the pre-halving year, Bitcoin went down in Q4, right? It went down in Q4 when normally, right? This year, it went up, last year it went up in Q4. So you can clearly see that it doesn't always play out in the same way in terms of time-based comparisons, right? We can't just look at every pre-halving year and say Bitcoin's going to go down in Q4, just like we can't look at every halving year and say Bitcoin has to go up in Q4. So I think for me, I have to begin the analysis by saying, look, guys, I get the loudest criticism is going to come from people saying it's the halving year. Stop comparing it to the pre-halving year. We don't care about that. But listen, I've been hearing that same thing all year long, and those voices that are the most critical, they've been the most critical the entire way that Bitcoin has been putting in lower highs, just like 2019. Now, here's where it gets tricky, right? Here's where it gets tricky. At some point, it would make sense that Bitcoin breaks the lower high structure, right? It's not like I expect the lower high structure to hold forever. And I imagine you don't either, right? You probably wouldn't be watching this video if you thought that Bitcoin was destined to fail, okay? So then the next question is okay, well, if we believe that Bitcoin will eventually break the lower high structure, what do we need for that to actually occur? And what did it take last cycle? Well, there's two ways to think about it, right? And this is what I said back in March, right? Back in March, I said, look, guys, I know everyone wants to take this thing to the moon. I get it. I sympathize with you. However, there's a couple of things that we have to keep in mind. One of which is USDT dominance. And here's the reality of USDT dominance. And I'm just going to say it plainly so that there's no ambiguity, right? Should not be any ambiguity when I say this, because it's just a fact. It's not what I think. It's what has always happened. Now, could the market deviate from what has happened? Absolutely. But there is one inconvenient truth that we have to at least acknowledge. And that is that every time that USDT dominance has hit this trend line, Bitcoin subsequently dropped at least 50% before the actual bottom was in, right? At least 50%. That, again, this is not a, oh, Ben thinks this. This is what's happened. And I don't control the chart, right? I don't control what the chart says. I just simply enforce it. So in December of 2017, USDT dominance first, we developed the trend line. And then, of course, Bitcoin dropped 50% in June 2019. After it tagged the trend line, it eventually dropped 50%. Even in February 2020, when it came close, 50%. May 2021, we got the 50% drop from 64K down to 29K. November 2021, that kicked off the bear market. And, I put out a tweet on March 14th at the top showing this trend line. And we talked about it back then, too, right? Showing this trend line and saying, look, guys, as much as I know everyone is calling for 100K by the halving or 100K by the summer of 2024 or whatever, normally what happens when USDT dominance hits this trend line is we get a correction, right? Now, it doesn't have to be 50%, but you would at least expect a correction. And we've gotten one. Now, from a time-based perspective, if you exclude the landing, right? If you say, to hell with the landing, let's assume there's no landing and we just keep on moving, right? Then from a time-based perspective, Bitcoin has already run its course, right? I mean, it's been about 6 months, right? I mean, it was the 29th week or so where Bitcoin broke the lower high structure. And again, I know there was a hard landing immediately following that, but let's just for a minute suppose that didn't exist, right? Let's just say, you know what? Just ignore that right there. And let's just say this is what happened, right? This is my chart. I can do what I want, right? Let's just ignore that. Bitcoin broke through the lower high structure after approximately 29 weeks. So when you look at it here and you say, all right, well, how long has it been? It's been about 29 weeks, right? It's been about 29 weeks. And so if you draw out the lower high structure, you could argue, well, why can't this be the week where it breaks out? Look, why not? What's to keep it from breaking out? It's been about 29 weeks. It was about 29 weeks last time. Surely there's a possibility that it follows suit. And you could be right? I mean, that thought process has to be on your radar. Like, I don't think it makes sense to ignore it. Absolutely not. And this is why I have said, look, no one knows what's going to happen. I don't know exactly when Bitcoin's going to break through the lower high structure, but what I will say is this. Having a Bitcoin-heavy crypto portfolio over the last few years until Bitcoin dominance hit 60% has served me well. Again, did anyone predict this exact move? No, not even me. I mean, yes, I called for a lower high structure, but it's not like I knew every step of the way, exactly where it would go, right? Of course, it's playing out like 2019, so the process is playing out, but it's not like I knew exactly the way in which it would play out. So then I have to consider, well, could this be time, right? Could it be time for Bitcoin to break out? And I don't know. The pessimistic side of me says no. And if I'm being honest, you guys know I have tended to sort of lean on the more cautious side of things. It doesn't mean that I don't have a position. It just means that, I'm looking at some of the realities of the situation, and I just see that the altcoin market has been struggling, and we can see the unemployment rate's been moving up, and so I can't ignore the possibility that it doesn't break out. Now, if you were to look at the ROI of Bitcoin after the low, we talked about this in a video a few days ago, and we've been talking about it for a while, right? We've reached the point where if Bitcoin's going to continue the cycle as it normally does, then this is the time it should start moving up, right? And then it did, right? It started moving up as it always does around this point in the cycle. But now it's starting to sell off a little bit, right? It's deviating from the last two cycles. Now, I would argue that it's not yet too far gone to get back on track here, but this is a notable change, right? I mean, normally at this point from the low, Bitcoin's just trending up. But yet Bitcoin has sold off once again. And I said previously that the only real thing that I think Bitcoin will sell off to, there's two things, right? There's geopolitical risk and the labor market. Those are the only really main two things. The issue with geopolitical risk is it's impossible to predict that stuff, right? No one can predict what's going to happen amongst the geopolitical landscape. Especially if they can, they're probably not going to be able to convince you as to what's actually going to happen in the market because of it. So let's just say it's more so dependent on the labor market. Now, this week we've had some mixed things, right? I mean, in some regards, ADP employment came in today better than expected. Job openings came in better than expected. But hires, right? Again, I don't know why I'm telling you this. We gotta take a look at it, right? I can't just tell you these things. Job openings, right? They came in better than expected, and yeah, it's still a downtrend, but who knows? Maybe it'll bottom out soon. If you look at hires, that's been a little concerning. It's dropped some, and I think the most concerning thing out of the data released so far this week is the quits rate. I mean, the quits rate is 1.9%, the lowest it's been since 2015. Now, I think a lot of people think that quits going down is good, but I mean, if you look at prior economic downturns, quits go down during economic downturns, not up. Because during downturns, people don't quit their job because they're too afraid that they won't be able to find a new job. So if you don't think you can find a new job, why would you go quit the job you have, right? So as policy gets tighter, companies tighten the belt, and as a result, people don't quit as much. In early 2022, people were quitting left and right because monetary policy was loose. And you know, why worry about keeping your 9 to 5 if you can just go trade NFTs, right? That's the issue. And that's why, you know, sometimes during business cycles, they let policy get too loose, and the frothiest of things, you know, come to the surface, right? The frothiest of things rise up, and then the Fed, and then we get a lot of inflation and everything because all that liquidity is looking for a home, and the more liquidity just sloshing around, the riskier of assets it will go to in hopes of a higher yield. And so now we're sort of seeing the opposite extreme where quits are getting pretty low right now, and the Fed's only begin to cut rates, right? They've only started to cut rates. So it's unclear how long it's going to take for this to bottom out. I mean, even though the Fed cut rates, this could still take a while to really start to durably move back up. Okay? So what I said previously is if there's something that's going to take Bitcoin off of its prior market cycle trends, it would be the labor market. Now, again, it doesn't have to take it off forever, but it could take it off for some time, just like it did last cycle. So this is the week where I said it's a really important week because Bitcoin's back above the bull market support band, but depending on where the labor market data comes in, it could drop it right back below, right? And right now, it's too early to make that call because, I mean, the 21-week EMA is right above the current price, right? The 21-week EMA is like 61.2K. We're at 61.1K. It's always possible that Bitcoin still closes this week above the bull market support band. And if it does, then the integrity of that support band may continue to be held until the lower high structure is broken. But I do want to talk about one concerning thing, a couple concerning things, actually. One of the things that you'll notice is that what happened last cycle after the Fed cut rates is Bitcoin rallied for 2 weeks. Okay, so the Fed cut rates during this weekly candle right here. And then Bitcoin rallied for 2 weeks. And then about 2 months later, Bitcoin, about 8 weeks, Bitcoin fell to the 100-week moving average. Make sense? Now, what's interesting is 2 weeks up, and then 3 weeks down, and then there was another green candle. I want to talk you through one potential path here that I don't really think is that hard to imagine, right? If I had to pick any path, I'd say it's got at least a 50% likelihood of it happening. It doesn't have to happen, but if Bitcoin is unable to break through the lower high structure, let's think about this for a minute. When did the Fed cut rates over here? You can see we had 3 green weeks in a row, but when did they actually cut rates? They didn't cut it right there. They cut it right here. So after the Fed cut rates, Bitcoin rallied for 2 weeks, right? Bitcoin rallied for 2 weeks after the Fed cut rates. And now Bitcoin has been selling off again. Now, is Bitcoin going to follow through just like it did over here? Because if it does, it means that it could, drop all the way back to 59K or something in the short term. And we're going to get some more labor market data, before the week is over. So if Bitcoin falls back to 59K, then this scenario is at least somewhat valid. Now, you know how there is another green candle that ended up occurring about a month later? That green candle might be the second rate cut by the Fed, right? I mean, if you go look at CME Group and you look at sort of market expectations, the market is expecting the Fed cut again in November 7th, which is only, about a month away. So I'm looking at this and I'm saying, like, okay, if this is not the time, like if it's not yet time for Bitcoin to break the lower high structure, right? If it's not yet time, then what might happen instead? Okay. And so I say, look, guys, back over here, after the first rate cut, Bitcoin rallied for 2 weeks. Everyone called for the moon, and then it came back down. And then, the Fed cut again back over here. They cut again in September, I believe. Yeah, they cut in July, I think, and then I believe it was September and November, something like that. I don't know exactly. And then it was late September, after a couple of rate cuts, that Bitcoin fell to the 100-week moving average. And so, am I wrong to assume that there's a chance that could happen again? I don't think so, right? I don't think it's wrong to assume that. It could happen, right? It could happen. And for me, when I look at monetary policy, I at least have to think, like, why wouldn't it happen? One of the things that has always happened with Ethereum, right? If you go look at what Ethereum has done historically, is that after ETH Bitcoin breaks down, Ethereum goes to its lower logarithmic regression trend line, right? I mean, there's 3 times in history when ETH Bitcoin has broken below support. Here, we're looking at ETH USD, but I'm saying the ETH Bitcoin chart fell below support 3 times. And the last 2 times that it did that, ETH dropped about 70% before bottoming. Right? So, and again, the final drop in those 70% drops occurred in Q4 of that year. This was Q4 of 2016. This was Q4 of 2019. So why can't this be Q4 of 2024, where ETH finally goes to the lower logarithmic regression trend line? Now, here's the thing. In 2019, when ETH went down here, Bitcoin went down. But in 2016, when ETH went down there, Bitcoin went up. So there does exist a scenario where ETH goes down while Bitcoin goes up. But if I'm being honest, I think they're more highly correlated today than they were back then. And I think it's more likely than not that if ETH goes down here, Bitcoin's also dropping, potentially back to its yearly open. Okay? So that is I think the consideration to make here, right? Because last cycle, after the Fed cut rates, Bitcoin did get a couple of rallies, but it still fell short, and ultimately Bitcoin went to the 100-week moving average. Okay? So it's an important consideration here, right? I mean, like, and it's one of those things where, like, I don't really like talking about it a lot because, it basically just makes people upset. They'd prefer to hear sort of the echo chamber of up only. And it's not like I don't want to dance too, right? I want to be there for the party. And surely if Bitcoin does go up in Q4, I'm sure anyone will look back at this video and say it was nonsense. And that might be the case, but I do at least want to put this out here because what I've seen happen basically since March is every single rally by Bitcoin is met with people basically screaming that people are going to get left behind if they don't, YOLO into alts and whatnot. And instead, what we've seen is we just see the market slowly march lower, right? You remember we were talking about USDT dominance earlier? It's just been putting in higher lows, right? I mean, recently it's been bouncing off its bull market support band. In the same way that Bitcoin's falling beneath its own, USDT dominance seems to be holding it as support. And you can't really get another durable rally by Bitcoin until USDT dominance breaks this trend line. So you got to look at that and wonder, right? I mean, why do everyone keep getting so excited every time USDT dominance hits this trend line right here, the shorter term trend line, and they just keep YOLOing into the next lower high, and basically dismissing any alternative view. Why? Because it's the halving year. And as far as they know, in the halving year, Bitcoin only ever goes up. Now, there is a reality to some degree, they're not wrong, right? Historically, Bitcoin does go up in Q4 of the halving year. In fact, if you were to look at quarterly returns, 2020 Q4, Bitcoin went up 166%. 2016 Q4, Bitcoin went up 57%. And 2012, it went up 9%. But I also see a lot of people floating charts around that cut it off at 2013, and they'll say Bitcoin only ever goes up in October of election years because it went up in October of 2020 after, or that was an election year. It also went up in October of 2016. And people will make the case that Bitcoin always goes up in October, if September is green, right? The problem is that they are ignoring anything that happened before 2013. Now, I get it. Bitcoin's market cap was a lot smaller, but I also don't get why exclude data just because you don't like it, right? In 2012, September was green, and then Bitcoin dropped almost 11% in October. So it can happen, right? It's not like Bitcoin's immune to dropping in October. It is possible. And so I want that to be on people's radar. Even if it doesn't play out, right? Just have it on your radar in case the market throws you a curveball. One kind of uncomfortable similarity between this still, right? Because as much as I know everyone wants to jump on board of the it's been 6 months, it's time to break out, right? I get it. And hope for the best, right? Let's hope it happens. Plan for the worst, right? So you don't invest by just ignoring any possible downside risk. You acknowledge it, right? Information gives you power to make better decisions, right? Imagine in 2019 if you had just thrown all your money in at 14K and then you sold it all down here because you got scared. And yes, there was this, but then look what happened a year or two later. Right? So I'm not telling you this so that you can go panic sell or anything like that. I'm just saying, look, guys, have a plan in case this happens. Because this is what happened last cycle. But the uncomfortable similarity between these two moves is that in 2019, this rally was about a 350% rally, just like 2023 to 2024. About the same, about 350%. But then Bitcoin dropped about 34% before the first rate cut, right? I want to be clear. In 2019, Bitcoin dropped right here, 34%, and then the Fed cut rates. And when the Fed cut, leading into that, just before the Fed cut, Bitcoin started to rally. And then by the end of the first rate cut rally, Bitcoin had rallied 35%, right? So 34 to 35% down before the first rate cut, and then 35% up as that rate cut arrived, but then it resulted in a lower high. Now look at it over here. What do you notice, right? Does anyone care to take a guess at how far Bitcoin has dropped so far? Coincidentally, it dropped 33% before the first rate cut. And so far, it has rallied about 35%. Maybe even a little bit more, right? If I get that wick right, it's kind of hard to get it exactly right, but about 35 to 36%. So still, it hasn't deviated from that view, right? If you only looked at monetary policy and you said, all right, how far did Bitcoin drop from the sort of the QT, the quantitative tightening high interest rate top when gold broke out? How far did it drop before the first rate cut? In 2019, it dropped 34%. In 2024, it dropped 33%. And then you might say, well, how far did it rally as the first rate cut arrived? 35% in 2019, 35 to 36% in 2024. So there's still a similarity there that I feel like we cannot ignore just because we want to say, well, it's the halving year and Bitcoin only goes up. That is still something that we have to contend with. Okay? And so the way to sort of get past this is for Bitcoin to put in a higher high, which it has not yet done, right? And my concern here is, what if Ethereum is telling us that there's something to be concerned about? Because Ethereum is not playing ball. Now, there's two theories behind this, I think. One of which is that some people think that Ethereum is a has-been and that it's going to go down and there's going to be replacements for it. That's theory number one, which I wholeheartedly disagree with. I think what's going on is that Ethereum is sniffing out some weakness in the market that other coins have not yet figured out, right? I think that's what's going on. And I still think Ethereum will stay number 2 by market cap for quite a while. And I'm more so thinking that if ETH drops to its lower logarithmic regression trend line, if it drops all the way back down here, how is Bitcoin not getting a drop similar, right? How is it not getting a drop that's similar to that? And so for me with ETH, I think that you will likely see it drop down here in Q4. And if it does, it would make sense that Bitcoin would get something similar, even though it doesn't have to be the exact same thing. Now, if Bitcoin is rejected up here again, and it comes down again, then you have to look at this trend line down here again. And if you look at the bottom part of this trend line, let's say by December, the reason I say December is because in 2019 and 2016, ETH USD bottomed in December. Okay, so if it takes until December, then that would put the price of Bitcoin, we get a price label, it would put the price of Bitcoin right around $42,000. The reason why 42K is an interesting number is because if you go back and look at the 100-week moving average, you can kind of see that, you know, by the November to December timeframe, that's basically where the 100-week moving average is going to be, right? Somewhere 42 to 45K. Now, again, if it just simply takes 8 weeks from that top, or sorry, not from that top, but from the end of the first rate cut rally, if it takes 8 weeks, or sorry, from the first rate cut, that was 8 weeks last cycle. If it takes 8 weeks from the first rate cut, that puts Bitcoin potentially coming back down here by mid-November, which coincidentally is just after the election. I'm not going to get into politics, but it's just after the election. So I wonder about that, right? And I do think that there's going to be a landing, right? I think you could have a soft landing, you could have a no landing, you could have a hard landing. So far, this has just been a no landing, right? I mean, I don't think anyone can look at the S&P 500 and say, oh yeah, we had a soft landing, right? Where is the landing? No, there's no landing right now. It's a no landing so far because inflation hasn't durably gone back to 2%. You know, core PCE, I mean, core inflation is still pretty high. And so I don't think you can say just yet that this plane has landed. But you could get a soft landing, right? You could. And I think that last cycle showed us what a soft landing looked like. It was a pullback to the 100-week moving average. That was what the soft landing looked like. The hard landing was breaking below that, right? But that was the soft landing. So for me, when I look at this stuff, you can also see the cycle before that, Bitcoin pulled back to the 100-week moving average. You might say, well, 2016 was a great year for the stock market. Well, if you look closely at the stock market in 2016, it sold off. And that's when Bitcoin hit its 100-week moving average. So you got to make the comparison, right? I think you have to at least acknowledge that it's there. And what's interesting is you could get a situation too, again, where Bitcoin breaks out of the lower high structure and then still comes back down to the 100-week moving average, right? I mean, that's what happened last cycle, although I don't really think it's going to play out the exact same way. I'm not calling for a pandemic-induced recession, obviously, but that is at least something to consider. My base case for now, I think, is, I still think Bitcoin heavy makes more sense than alt heavy, mainly because I do think there is a compelling case that Bitcoin dominance is going to go higher. It's hard for me to know for sure, obviously, if it's going to go higher on a Bitcoin drop or a Bitcoin rally. Recently, it just seems to mainly go up on Bitcoin drops, which is why I'm sort of thinking, maybe we do get another drop into the 100-week moving average, just like 2019, just like 2016, also years that ETH Bitcoin broke down. And so if that's the case, then it means that Bitcoin dominance could go to 60% on a Bitcoin dump rather than a Bitcoin rally. So the way I would play it for me is, having Bitcoin in case the lower high structure is broken, but also having plans to say, you know what? Hell, if this plays out like 2019, I want to make sure I have something to buy if that happens. And I think that's a relevant way to view the market. There are some other things I've looked at a lot this year, and I've struggled as to whether to make a video on them or not. And I think for now, I will continue to defer, some theories for other times. But this is something that in the short term, if this plays out, the 100-week SMA is the line, right? That would be where Bitcoin at least hopefully can find some support. There's, the only other thing, yeah, why don't we leave it there? Why don't we leave it there for this video and say, all right, that's what I would look for in the short term. If Bitcoin is unable to continue its higher low, or if it's unable to continue it following the ROI from the low from the last two market cycles, then the 100-week SMA is where it makes sense to look next, right? If it falls off. And it looks like it might be, right? I mean, frankly, it looks like it's starting to fall off of that view, right? Because you can see pretty clearly right here, it's starting to not keep up. And I said before, it'll be the labor market more than likely that knocks it off the prior track. Okay, and we're getting labor market data this week, and sure enough, Bitcoin is faltering a little bit. So that's what I would look for going into Q4 of 2024. If Bitcoin cannot break the lower high structure because of the labor market weakness, I'm not saying recession, right? I'm just saying weakness in the labor market. If it can't break through the lower high structure and the bulls just get tired once again, then I think your eyes have to be drawn to the 100-week moving average, which is where Bitcoin fell in Q4 of 2024, Q4 2019 and Q1 of 2016. I think I said Q4 2016 earlier, but it was Q1 of 2016. But again, it was a halving year, right? It was in fact a halving year. And so those are, I think, the views on the market that I want to express in this video. There's one other thing. It's not what I was talking about earlier, but if you look at stablecoin supply ratio oscillator, I was looking at this a few weeks ago. I showed you guys this, and I said, look, this might be a time for Bitcoin to bounce. We're getting a rate cut. Normally, last cycle when we got a rate cut, Bitcoin rallied for a couple weeks. If you look at the stablecoin supply ratio oscillator, the last, the other two times where it bounced from that level, January 2022, and then also happens to be October of 2019, right? Bitcoin bounced. And then it ultimately eventually came a little bit lower, right? So you can see that some of the major lows occur when the SSRO, the stablecoin supply ratio oscillator, gets all the way down here, right? December 2018, March 2020, June of 2021, and even June of 2022 was a pretty good low as well. It hasn't gotten down there, but if Bitcoin does go to the low 40s by the end of the year, there's a good chance you'll find the SSRO all the way back down here, basically completely reset from that entire move, right? And the other thing too to consider as far as Bitcoin and everyone's proclamations for alt season, Bitcoin dominance, I've said this many times, I think it's going to 60%. And you might say, well, hold on a second, looser monetary policy is here. You're right about that. That's a fair assessment. But I said previously, last cycle, dominance didn't top until after the Fed cut rates. It was about 5 weeks, in fact, after the Fed cut rates. And also, it didn't top until QE arrived, which still hasn't happened yet. Right? Don't take my word for it in case you're new. Just go look at total assets held by the Federal Reserve and see that it was when the Fed went from QT to QE that Bitcoin dominance finally topped. And that hasn't happened yet. So because it hasn't happened, why should I assume that dominance has topped? I don't assume that it's topped. In fact, if you look at all Bitcoin pairs, I'm still adamant that they're going to keep moving down. Why? Well, one reason to remember is that they do tend to follow net liquidity, right? Net liquidity. The problem for net liquidity right now is that a lot of central banks are still reducing the size of their balance sheet, but furthermore, it's a function of the dollar. It's a function of the dollar because you got to convert the local currencies from those central banks into the dollar. So if the dollar's bullish, then it means the purchasing power of those other central banks goes down as it relates to the dollar. So if the dollar's going up, net liquidity is going down. And you can see pretty clearly that alt Bitcoin pairs continue to track net liquidity. And net liquidity is starting to roll over here. And now you can see alt Bitcoin pairs are starting to show weakness again. And I've talked about this for a while. The dollar is starting to get a big bounce here. You know what I think? I've said this before. Look at what happened in 2016. You know, you guys like comparing Bitcoin to 2016. Well, compare the dollar to 2016. It was struggling in August and September. And then the minute October arrived, the dollar shot up 10%, in fact. Right? The dollar went up 10%, 9%. Imagine if the dollar goes up 9%, that would put it at 109 to 110. If that happens, net liquidity goes down. If net liquidity goes down, what does that mean? It means dominance is up and all Bitcoin pairs are more than likely down. So that's where I am on this stuff. And I continue to stay stuck in that place. And as much as I want to join you guys on the alt season calls, I can't, right? I still think dominance is going to go higher. And I think everyone keeps front running it before it's actually time. Bitcoin dominance has been in a massive uptrend for years. And I think it's got I think it's got one last leg in it, at least one. I think it'll top out by the end of the year, second week of January at the latest, is my guess. And why do I say it's going to top? I think it's going to top because the economy starts to slow down. Again, it doesn't have to be a recession, but I think there could be some signs, some more obvious signs that you know, monetary policy, the lags are starting to work. And if that's the case, then it means monetary policy's got to go back the other way. It's got to start to loosen up. And if that's the case, it means Bitcoin dominance is likely going to top out because people will start to take some more bets on riskier assets as policy loosens up. But that's where we stand. There's other ideas that I do want to talk about, but for the sake of this video, why don't we go ahead and wrap it up? It's already been about 43 minutes or so, which I do believe has gone on long enough. So those are my views. If you guys like the content, subscribe, give the video a thumbs up. We do have Into the Cryptoverse Premium at intothecryptoverse.com. Links in the description below. Make sure you check it out. We do 3 premium videos a week, including an AMA. You also get access to the website. We got thousands of charts, not only for crypto, but stocks and macro stuff as well. We're constantly building out new things. And I will see you guys there. Hopefully you guys sign up, and I will see you next time. Bye.